Okay guys, in this video we want to look at the rules of accounting, double entry accounting, and apply it to different kind of assets. So it's double entry accounting, but we want to look at what are the rules of debits and credits. Rules of debits and credits for assets, liabilities, owner's equity, revenue, expense, accounts. Well, I find the easiest way to do this is to remember the accounting equation. Assets equals liabilities plus owner's equity. And then owner's equity is influenced by sales minus expenses equals a net income. So it makes sense that if our assets equals our liabilities plus owner's equity, and if I were to tell you that a T account for an asset account, okay, if you want to increase an asset account, the rule for increasing an asset account is to debit the account. If you want to increase an asset account, you debit. That is a mistake. I drew it on the wrong side. Erase that. That's the credit side, right? You guys are smart. You caught that. I know you caught that. So the rule for increasing an asset account is to debit it. To increase an asset account, you debit the account. Now, just visually, if I know that assets equals liabilities plus owner's equity, and I draw T accounts over here, what do you think the rule is going to be for increasing a liability account or an owner's equity account? If I know that those two things equal assets, and I know that double entry accounting says for every debit there has to be a credit, or the total of the debits equals the total of the credits, wouldn't it make sense that to increase a liability account we would credit the account? If the positive on the asset is on the left side, then the positive on the liability must be on the right side. And the positive on the owner's equity must also be on the right side. Why? Because I know these things have to equal. And if I put $10 here, I've got to put $10 over there or $10 over there. Somehow I have to have credits of $10 to equal that $10 of debits. So visually you can think of it that way. The asset, to increase an asset account, we debit the account. Well, how do we increase a liability account? It's going to be the opposite of what we do in the asset account. We're going to credit it to increase it, credit it to decrease it. What if we want to decrease the asset account? To decrease the asset account, we would credit it. To decrease an asset account. Well, if decreasing an asset account is crediting the account, then what would decreasing a liability be? It would be debiting the account. It's the opposite. The owner's equity, it would be debiting the owner's equity to decrease it. Because the rules for the assets are going to be, the rules for the liabilities and owner's equity are going to be the opposite as they are for assets. And so it's something that it might be, you just kind of have to commit it to memory. Soon it will become just, rote memorization. You'll just know it. It'll make sense because you're using it. To increase an asset, we debit the account. Or another way you'll hear it said is that assets have debit balances. To increase liability, owner's equity accounts, it will be the opposite. We credit the account. Double entry accounting tells us that it's going to be the opposite because the total of the debits have to equal the total of the credits. So to increase an asset, we debit the account. To increase liabilities and owner equity, we credit the account. Now let me ask you a question. What about these guys over here? Sales and expense accounts, right? Does a sales account, does selling increase or decrease owner's equity? Well, we know that sales are a good thing, right? There's a smiley face. Sales are a good thing. They increase owner's equity. So if sales increase owner's equity, how do we increase owner's equity? With a debit or a credit? We increase owner's equity with a credit. So to increase a sales account or a revenue account, we credit the account. Why do we credit it? A revenue T account looks like this. It has a credit balance. Why? Because we know it increases owner's equity. Revenue account increases owner's equity. So it has the same kind of behavioral dynamic as owner equity. And what do we know about owner equity? To increase owner's equity, we credit it. So to increase sales, we credit sales. Expense is the opposite, right? Expenses are a bad thing. They're not a bad thing. They're a necessary thing. But expenses decrease owner's equity. And if expenses decrease owner's equity, do they appear as debits or credits? The answer is they appear as debits. Expense has a debit balance. Why? Because it decreases owner's equity, and when owner's equity is decreased, it's a debit, not a credit. So lastly, we could write down here in the bottom, I'm running out of room on my, well, let me see if I can fit it in here. To increase expense, to increase expenses, we debit the accounts. To increase expenses, we debit the accounts. I like to think of it as, you work with it for a while, you just know it, but I like to think of it in terms of how it relates to owner's equity. And if I know owner's equity is increased with a credit, and I know that expenses decrease owner's equity, it must be a debit balance as opposed to a credit balance. So it's the opposite of the owner's equity account. Just like the sales is the same as the owner's equity account. Sales behaves the same way owner's equity does because it increases owner's equity. Again, as we work with these and as you post transactions and you see it happening, it will make much more sense. But just to introduce double entry accounting and the rules of debits and credits, depending on the count that we're working with. Asset accounts have debit balances. Liability accounts have credit balances. Owner's equity accounts have credit balances. Sales accounts have credit balances. Expense accounts have debit balances. And those are just the rules of accounting. It's just how it works, how it balances. It's part of generally accepted accounting principles, and it will make sense. It's just a question of becoming familiar with, okay, what kind of account is this? Is this an asset? Okay, I'm trying to increase an asset. Oh, I debit it. Okay, what kind of an account is this? Oh, it's a liability account. Okay, I'm trying to increase a liability account. What do? Oh, I credit it. What kind of account is this? It's a liability account. Okay, I'm decreasing a liability. What do? Oh, I debit it. And it's just becoming familiar with and working with these rules of debits and credits as they apply to particular kinds of accounts, and knowing that those accounts are going to behave, I want to say, as opposites. If assets are increased through a debit, then liabilities are increased through a credit, which makes sense when I understand that accounting equation because it always has to be in balance. So I hope this helps. I hope it makes sense. If it doesn't, again, doing things, seeing things in practice, working through exercises in class will help to reinforce this. If it's overwhelming and your head's starting to spin, trust me, with time it will make sense. It's just a question of working with it and seeing the same principles applied over and over and over. So hang in there. See you in the next video.